We come to the US dollar Japanese yen currency pair. We can see at the weekly chart that the pair declined and that the resistance line of 2016 is still broadly in place. So as the main support mark, which is located at 100 yen per dollar level. We should talk a bit about the Bank of Japan here because it is one of the most important factors for the dollar yen. The Bank of Japan did announce something new. It shifted from targeting base money to targeting 10-year government bond yield in order to limit the negative impact on profitability of commercial banks. At the same time, the regulator didn't increase the size of its monetary stimulus program, and that's why after the initial decline, Japanese yen strengthened and dollar yen went down. The fact that the Federal Reserve signaled a slower path of interest rate hikes in the coming years also deprived the pair from bullish drivers. This is why we got what we got, the overall decline of the pair. In my opinion, the lack of additional monetary stimulus in form of more asset purchases or lower interest rate will be a negative factor for dollar yen, and negative factors will prevail for this currency pair in the coming week. In my opinion, the bearish pressure on 100 mark will intensify, and we may see the pair testing levels below this important point. On the one hand, levels to targets I would mention at, let's see them. They will be around 99.70 and 98.60. I don't think that we'll get some sharp decline below 100 yen mark to the levels around 95 yen per dollar. No, there will be the risk of monetary interventions from Japanese monetary authorities. They have already said that they are closely monitoring the situation in the currency market, and the volatile moves will make them make at least verbal interventions. I think if we have levels below 100 yen, then we'll get commands from Japanese monetary authorities, and as a result, the spikes of dollar yen to the downside will take place, but they will be very short term, and we'll see buyers around 99.80 and 99.98.60 marks. So be careful with your short positions. Overall, dollar yen should remain somewhere between 101.50 and 99.50 this week. Support also for the pair is provided by the fact that as the Bank of Japan didn't make additional monetary easing, the market players will still expect the Bank of Japan to make these steps at further meetings as inflation continues to remain rather low in Japan. So this is a kind of trading strategy for dollar yen. If we have upside, then watch resistance levels at 101.20. 102.50 should be a good level to re-enter short positions on dollar yen, but having conservative targets around 100 yen mark.